Good morning. It's Tuesday, August 5th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So stock futures are rising as Palantir's earnings exceeded expectations, boosting enthusiasm for the AI sector. Along with increasing bets for potential interest rate cuts, there's enough positive factors to outweigh the ongoing concerns about tariffs, especially with India emerging as Trump's latest target. Now, as a result of this new headlines and these new flows, what I'll do is I'll check in on specific commodities that surround India and see if there's any real meaningful movement. You look at the sugar market slipping down about 1% here, back at the bottom end of the range here, and it looks like the floor could start to fall out on the sugar market. So a little bit of concern there. Might want to reduce some of those positions if we're still holding any of them. Then also looking at the gold market, down about $14, which is about 0.5%. Gold has seen a meaningful boost to the upside. And then finally, the specific area of focus that Trump is targeting, and its oil prices, which are extending a 3-day decline as investors assess the risk to Russian supplies. So U.S. President Donald Trump, he's intensifying his threats to penalize India for purchasing crude oil from Moscow. He announced that he would be substantially raising those tariffs on Indian exports to the United States in response to India's Russian oil purchases. That's part of an effort to pressure Moscow into agreeing to a truce with Ukraine. So looking at the S&P 500, that's up about 20 basis points here at 63.69. So it's up 13 points here. And then you look at the NASDAQ, up about 0.3% at 23,372. That's up about 76 points. You do have the Russell 2000 up about 0.5%. And then the FANG stocks are also pushing up about 0.5%. So really the levels I'm going to look at on the S&P 500, 63.80, that's just above the overnight high. 63.92 was an old resistance point. If we could start to crack above those, we could really start to see prices accelerate higher, as I think a lot of the short sellers and a lot of the people that capitulated on Friday, and I thought Friday was quite comical here with the 2% sell-off in the U.S. equity markets and all the tops in, crash calls, the recession is here. You know, fear really sells in these markets, and I really should just headline this particular video as 5 reasons why the stock market's going to crash from right here, and we'll see how many views I get here. That's why a lot of people use silver $50 target, gold $4,000 target, rather than look at fractal geometry and see where things are going. One thing on the silver market, I'd hate to see it peak, just like how we hit $39.91. I'd hate to see it peak at $49.91 and all the people waiting for $50 just don't get it. That's why I use the tactical ranges every day here, and I look at where 3 standard deviation moves on certain markets based upon volatility and where we're trading at here in the current cycle at the moment here as far as predicting where price movements can lie. But that's slightly off topic here. So getting back to it here, traders are really becoming focused here, and this is where gold got its boost. This is where the Russell 2000 got its boost here yesterday. This is where yields had fallen off. We're seeing the dollar index start to roll back over again, and it's really traders are focused on the Federal Reserve's next steps here following that weak jobs report on Friday. According to a report by Reuters, you got San Francisco's Federal Reserve President Mary Daly, and what I do is I really pay attention to who the voters are within the FOMC. One thing I'll do is I'll look every single week on the weekend and I'll see, okay, what is the central bank? What are the speaking arrangements and schedules? And then I'll highlight the ones where they are voting members, because if you get enough of them swaying in one direction, really the case for the interest rate cuts really start to boost up here. So Mary Daly, she's basically stated that the time for interest rate cuts is approaching. She noted that the increasing evidence of the soft labor market here and that there are really no indications of long-lasting inflation driven by the tariffs. So again, she's important because she's a voting member. So what then I'll do is I'll check the CME's Fed Watch tool and I look at what the rate cut probabilities are. That next meeting is going to be September 17th, and the probability is about an 88.1% chance that the Federal Reserve will cut 25 basis points at the next meeting. I'll go 1 week ago ahead of that the Fed meeting, and then also all that labor data coming out and all that other data that we saw last week, and it was a 63% chance. So this is now taking into everything that we've seen and everything that we've heard coming out of Chairman Jerome Powell, and we've added on about a 20% chance that the Fed will cut rates. It looks very high probability, and it really that data that came out the jobs data really cemented those revisions that the labor market is weakening substantially here. Now, going back to some things here, specifically with the tariffs, Trump said that he would be substantially raising the tariff on Indian exports to the U.S. over the nation's purchases of Russian oil. So what we're seeing here again, oil prices continue under pressure lower. I'll start to look at the chart pack and look at where those critical levels of support are in the oil market. And then I'm going to look farther out into the cycle of different contract months, because you got the December crude coming back below $64, $63.55. We'll want to take a look and see where that's at here and if there's any kind of actionable trading coming out. Now you get back to earnings. You had Palantir's results show that the AI trade that's here and alive here, that's really driving much of this rally here at the moment. And a lot of companies are really incorporating AI data centers, things like that, into their process here and really improving and expanding their client base. So we're seeing minimal impact on the copper market. Copper is going to be one of the big benefits here going forward. And I did a spot on CNBC where I talk about China, and they are continuing to modernize, industrialize. Their copper demand is continuing to increase, but also their ability to refine copper is improving as well. So you get copper futures kind of stuck here in limbo at the moment. That AI trade is really a 3 to 5 year out trade. And then all the supply issues with new mines coming online, it's a very slow and tedious process. So eventually the supplies will be outstripped. But right now we have ample above ground supplies. That's again why copper prices are not moving anywhere. Back on the earnings front, we're going to have AMD, we'll have Rivian, we'll have Super Microcomputer. They're all due out later today, as well as Match, Amgen, and Snapchat here. So again, the markets across the board, dollar index slightly higher here, pound slightly higher. You've got the other foreign currencies just ever so slightly lower. The grain markets are really mixed here at the moment. Cryptocurrencies are pushing up in a slow manner, though. We're seeing Ethereum start to outpace Bitcoin at the moment. And then you look at the softs markets. Again, I outlined sugar with its correlation to India. And you get into the metals market. So gold down about 16 bucks here, 34.10 on the December contract. And you get to silver up about 10 cents. You got copper futures flat. You got platinum futures pulling back a bit. The metals have really seen quite a big boost here in the last couple days here. So the exchange traded funds, they added a little bit of gold, but they're really complacent in that market at the moment. You look at the silver market, 3 straight days of declines, but nothing real meaningful. They only cut about 75,000 ounces of holdings in the previous session. So year-to-date percentage change, that's one thing I always monitor here. Gold up 10%, silver up 9.9%. The gold-silver ratio, though, with the interest rate cuts being really factored in, you see more of the stagflation play. That's where the declining growth comes in. That's where people are going to pitch those crash calls. They're going to start pitching the weaker GDP. They're going to start to pitch the higher and longer lingering inflation, and then they'll start to pitch the weakening labor market, and that's where you get the stagflation kind of effect going on. So you start to see that gold market really start to outperform silver just at the moment here. And really, again, remember silver being partially an industrial metal, it's really been held back by copper futures, not really getting any kind of volatility or move up at the moment. So we just want to keep an eye on, remember, it's not one thing, it's everything. And that's why we want to monitor all the dynamics of the markets and what's going on here at the moment. Something to note is that when you get these calls for like crash calls and things like that, really look at where the market's at, where we've been going, how far are we from, a 52-week high, a 52-week low, things like that. Because the reality is we were just making new all-time highs in the equity markets. So it's 2% pullback, in my opinion, and the way that it looks like, and the way that yesterday set up was the dip buyers were there and they were present in the market. So you're going to have people buying the dips until you get the material changes, and you want to look at what the trend is, where the breakdown in the trend is. That's why, again, the chart pack where I'm trying to outline some of these critical levels, at least big turning points in the markets here in order to reposition and readjust. But you guys got any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading, it does involve risk of loss and may not be suitable to all investors. Good luck, good trading.